Hey everyone, welcome back to GTech Finance. So the stock market basically collapsed today. It was pretty bloody. I'm not talking like Tuesday kind of collapse where we had a V-shaped, kind of crash. Then market opens up, crashes. We get to the lowest point we've seen, like Tesla 610, some of these crazy lows. But when V-shaped recovery comes and oh man, miss the dip unless you happen to be live, either watching some people's live stream or watching the market yourself on Webull or M1 Finance for that 15-minute period of the time you woke up later in the day on Tuesday, you would have missed the dip. Sorry, that sucks. But hey, that's why you wake up from market open and stay up for market close and then stay up market hours and basically never sleep. No, okay. Terrible idea. But anyways, today was worse. Today was not a V-shaped recovery. Today was literally a slip and slide straight down stock market for virtually all stocks. There was no safety today. Airlines down, cruise lines down, tech down, recovery down. So you think, oh, maybe this is a rotation from tech stocks to recovery stocks. No, that's only everything getting smashed, shattered. Disgusting day. Absolutely disgusting. As we're gonna try and explain it as simply as possible because it sometimes is frustratingly tricky. And the simple reason has to do with freaking bonds, treasury bonds. Nobody wanted to buy treasury bonds today. Now, if you don't know what a treasury bond is, it's, let's say this is a kind of paper. So you see, let's say this is a bond. So here, who wants to buy my bond? You buy it. The bond says, hey, it's going to cost you, say, $1,000, and it's going to pay you $20 for every year that you hold it. And basically take a little coupon, and let's say I tear a small piece from here, and then it pays you $20, and it's a 10-year bond. So you got, like 10 little coupons. That's basically how bonds work. And so there's a 10-year and 5-year, 2-year bond. I mean, there's so many different kinds of treasuries at 30 years. It doesn't even really matter. 100-year treasury bonds. But anyway, the rates on these bonds are rising. They're rising for a few reasons. We can talk about them later. But the important thing is they're rising. When these treasury bond yields rise, the market starts looking at that as, okay, that's actually a little bit tempting because the more I get paid owning a risk-free asset, and when I say risk-free, there's an asterisk there because there's really nothing that's risk-free, but the treasury bond is deemed to be risk-free because it's backed by the full faith and credit of the United States. Anyway, if you can get 1.5% or 2% or 2.5% on a treasury bond where there is zero risk of losing it, why take risk? And let's say an S&P index fund make 5% return on your money if there's a risk of a correction or a collapse and prices will go down and you lose too much. This is when companies need cash regularly, like Apple or whatever. They can take all of their cash and just YOLO it into a bunch of stocks because they can be exposed to that market risk when they want to be able to buy other companies, come up with new products. They need that cash. They park their money in what are called marketable securities. This is why when, say, on CNBC, you look at earning reports, which maybe you don't, but it's there. Usually you see the first line is cash and marketable security. So those would be things like treasury bonds. So the treasury bond yield goes up. And when the yield goes up, it actually becomes less desirable for people to buy stocks. And there's a particular tipping point where that becomes very prominent. There are 2 points, one on the 10-year treasury bond and one on the 5-year treasury bond. On the 10-year, that point is 1.5%. So when the yield on the 10-year treasury bond is over 1.5%, stocks tend to sell off in reaction to that. When the yield on the 5-year is over 0.75, stocks tend to sell off too in reaction to that. Well, both of these skyrocketed way past that. The 10-year treasury at one point went well over 1.55. Bloomberg reported it touched 1.6 for a few hours. And the 5-year treasury shot up the fastest it has ever shot up in 10 years, in over a decade. The 5-year treasury shot up faster than it ever has before. This spooked the market and literally tested new low after new low after new low after another. We had a bunch of these in today's chart, except the trajectory of the entire stock market day down into the gutter. But wait a minute, why are these yields going up? Like, what is causing these yields to go up? So we get it, the yields going up, these treasury bonds are leading people to buy, sell off stocks, okay, but try and buy bonds. The question is, why are these yields going up? We get now what happens when the yields go up and how the market looks at these thresholds for warning signs, but why are these yields going up? There has to be a reason, and there is. In fact, there are 4 different reasons. I'm going to break down these reasons, but it's gonna be a second day record for, really, it's not gonna be, it's a bad day for stocks. So I can't so we'll start with the first reason. Yields are skyrocketing, so let's get back to this bond. If somebody doesn't buy this bond, the US government's like, hey, we gotta auction off these bonds. Who wants to buy these bonds? And the government's like, crickets, like nobody's there. They go, okay, so what if we drop the price of this bond? You know, instead of $1,000, just charge, I'm gonna be a bit extreme here, half of it. So you're getting 20. And they say we'll drop the price to 500. Well, all of a sudden you'll have a bunch of people who buy it because the yield is just doubled. In that case, remember when the bond was worth $1,000 and the bond was paying you 20, that's 2% interest. But if the price comes down to 500, now you're paying 500, the coupon still says 20, then that means the rate you're getting is 4. So the yield goes up. In other words, the yields or the rates on the treasury bonds go up too when nobody wants to buy them. So why does nobody want to buy the darn bonds? 4 reasons. Number 1, massive stimulus coming. $1.9 trillion package it's getting closer and closer and closer. Well, guess how the government raises the money to do all the stimulus? They sell treasury bonds. They take out another booklet. They go to, has $1.9 trillion worth of treasury bonds. Hey, who wants to buy another bond? And when they have a whole another booklet of bonds coming, people today are like, why would I buy the bonds you have right now? You're about to flood the market with a whole set of other bonds. When you flood the market with a whole set of other bonds, we could just buy those at probably even lower prices and higher yields, because there are going to be so many bonds available, and as the supply of the bonds goes up, the price continues to come down. So in some sense, people are anticipating that more bonds are going to hit the market and the price is going to come down even more. Because stimulus is coming and that the rates go up. The second reason is strong growth is coming to the economy. Now this is a little bit of an ironic one, but the irony is people like, man, why would I buy a 10-year treasury bond and get 1.1 interest? Why would I do that? Come on, man. There's so much opportunity in stock market. Look at earnings. Etsy Beats, Airbnb, Beats Beyond Me, new partnerships. I mean, these are huge like earnings. This is so powerful right now. I can get 25% return in 1 year. And so let's say in stocks, and ironically that actually leads less buyers buying bond yields. The price go up, which then hurts stocks, and it's a disaster, right? The third problem is people are expecting inflation to come. When you expect inflation to come, guess what happens? You're like 1.1 treasury yield or even 1.6% treasury on the 10-year. Nah, man. As soon as inflation comes, that's going to be a joke. We're going to, for a 1.6 inflation, worse 2 inflation. I'm upside on my bond. I'm technically losing money. The real return, basically, you're getting the coupon, you're getting minus inflation, is negative, minus 0.4. Why would I buy that crap? I'll wait for rates to go up, buy myself some juicier bonds. And this brings us to the fourth thing. Like literally, these are 4 reasons why people are not buying the bonds right now. Fourth thing is like, why would I buy bonds? Now Jerome Powell's leader of the Fed end up flipping and he's going to end up raising rates. Why would I buy your crappy bonds now? I'll just wait for John Paul to raise rates and I'll get my 3% yield on a 10-year treasury bond. Yeah. So literally 4 massive reasons why people are like, why would I buy your bonds? Come on, man. Again, massive stimulus coming, strong growth coming, inflation, and an eventual rate hike. All reasons why right now we're not seeing people actually flock to these bonds. And as a result, these yields are going up. And so then begs the question, why are stocks falling again? Going back to the stocks question, well, it could be a multitude of reasons. I mean, You've got cover short squeezes. You might have some people stocks like Apple and Microsoft. You know, the Etsy's, the XP's, more bread and butter stocks. The Redfin. Oh my God! Don't talk to me about Redfin today. That was a disaster. Bad, real bad. Redfin, great company, but wow, we don't have to talk about that today because it's really bad. It went down a whole lot. So putting money into treasuries to bring the yield down on treasuries, it seems like people are selling stocks and then they're either yellowing it on GameStop or more likely for businesses and corporations maybe, and they're increasing their cash right now, thinking, well, let's wait to buy bonds. Let's sell off some of these other stocks we have, whether the hedge funds or whatever sell us some of these stocks. We have hold cash, or in some cases, hold Bitcoin, which ironically, Bitcoin was very, very stable today, around $49,000. I'm actually really impressed. Which, remember, if you want, Tesla went down, so I'd expect Bitcoin to go down, but yeah, no, it's still stable somehow. Yeah, so it was the best day for it compared to the others. So that's it for today. If you enjoyed the video, hit the like button, subscribe to the channel if you haven't already, and hope to see you guys another time.